One of Wall Street's most successful analysts just downgraded SoFi stock. And in today's video, I wanted to discuss whether or not I'm concerned about a slew of analysts either putting hold ratings or sell ratings on SoFi stock after the recent run-up. Guys, my name is Jason. Welcome back to the channel where I'm going to break down some SoFi for you guys today. I also do a ton of other stock market type of videos, so make sure you hit that like button and subscribe to the channel. All right, SoFi stock, guys, a little down today, about 2.5%, including after hours, down to $20.82. Over the last week, the stock is still green, up over 6.5%. Over the last month, we are tearing the roof off this joint, up 43%. Over the last 3 months, almost a double up, guys, coming in at 92.42%. Year to date, we're considerably outperforming the market. I think VOO is up around 7% year to date. SoFi is obliterating that. And over the last calendar year, up almost 200%. A double up and then another double up. Is it possible for SoFi stock to double up again? We shall see. So, do I agree with what these analysts are saying right now, right? If you take a look here on tip ranks, you can see over the last month, all of these analysts are either putting a hold rating or sell rating on SoFi stock. And Devin Ryan downgraded SoFi on 7/14. That was yesterday. He's a pretty good analyst, guys. I'm not going to bullshit you, right? I mean, if you take a look at his success, average return, 32.90%. Success rate, 71%. I mean, he's no Jason Amaral. I mean, come on, guys. Up 82% in the last year. Doubling up Mr. Devin Ryan. But he's a pretty successful analyst, dude. I'm not going to bullshit you. But some of his buy ratings are a little bit dicey, in my opinion. He put a buy rating on Hood, which has run up considerably. He put a $125 price target on Hood. Ay caramba, man. So I want to break down and compare Hood to SoFi right now, just to kind of give you guys a feel about where I'm at with this whole Hood versus SoFi business. If you take a look at Robinhood markets today, coming in around $100 a share, market cap around $88 billion, which is ridiculous. An $88 billion company when they are doing $3 billion in revenue, pretty crazy in my opinion. The forward PE is at 70. Trailing PE at 57.12. That's extremely high. But where it gets really crazy with Hood is, it makes no sense to me how you could downgrade SoFi, but then give Hood a 25% price increase until where it's at right now. Price to sales, 27.89. Are you fucking kidding me? Almost 3 times, a little bit less than 3 times what it was back in the end of March in 2024. The price to sales is outrageous, guys. Absolutely outrageous. And if crypto has any sort of downturn, Hood is going to get destroyed. Mark my words. Price to book coming in at 11. Back in March of 2024, it was 2.64. That's when you wanted to buy. Not, 4 times the price to book at 11. That's crazy to me. In comparison, we take a look at SoFi coming in at $23.5 billion market cap. Trailing PE, they're pretty similar, right? Pretty similar PE-wise. But here's where it gets a little different, right? It doesn't even have a PEG ratio on Hood, on Yahoo Finance. Price to sales, 8 for SoFi. Price to sales, 28. How could this dude, Devin, justify giving Hood a 25% run-up, 1-year price target, and a buy rating at these levels, guys? It just makes no sense. These people are so full of shit. I made a video about that. I'll leave the link of that in the description down below. Wall Street is completely full of shit. Price to book, 3.53. Back in March of 2024 was 1.47. 3.53. This price to book at 11, guys. Absolutely crazy. back to the hood income statement, revenue, 3.2 billion. SoFi's at 2.8 billion. How do you justify that type of market cap 4 times greater than SoFi? I think it's crazy to think that hood at these levels is a better buy than SoFi. I think that's craziness. Absolute craziness, right? Total cash. I got a shit ton of cash on hand, and they're going to need it because they're going to be burning through cash if and when crypto starts to kind of decelerate, in my opinion. But they still have a hefty debt load, man. Closing in on $10 billion in debt. Pretty crazy, guys. Especially when, the lever-free cash flow trailing 12 months, not looking great. So we take a look at SoFi, total cash $2 billion, total debt $3.28 billion. So they have 3 times the debt. But they also have, 6 times the cash, right? So these are 2 companies that the lever-free cash flow over the trailing 12 months isn't really where you want it to be completely honest, guys. So when I take a look at these metrics, hood is extremely, extremely overvalued in my opinion. 57 PE, and they better hope to God that crypto keeps on running. Because without crypto, that business model is just not as good as SoFi is, in my opinion, right? Like price to book at 11, price to sales at 28. Robinhood's just a brokerage, guys. That's really what it is. Is it really different than a Charles Schwab? It's kind of like if Charles Schwab and Coinbase had a baby. You think that regards a 28 PE? I don't. And I love SoFi's management team. Anthony Noto, Chris LaPointe, Anna and Kelly. Just doing great things, man. I'm really, really happy with the trajectory of this company. And this is a one-stop shop for digital financial services. Does Robinhood have mortgages or offer student loans? No, they don't. They're a one-trick pony right now, and they're really benefiting from this crypto run-up. And it's not going to run forever. It never has. It never will, in my opinion. And it's getting a little, all-time highs. It's getting a little stretched, in my opinion, Bitcoin. All right. Another reason why I think these analysts are wrong about SoFi is like this member acceleration is amazing. Compound annual growth rate over this stretch, 52%. It's remarkable, right? We added, 800,000 new members in Q1. You extrapolate that over a year, it's coming in over 3 million new members. 2.8 million in 2024. The acceleration in memberships just keeps growing and growing and growing. The last thing I want to touch on today, guys, and please do me a huge favor, hit that like button and subscribe to the channel. It really does help this channel grow. Okay, what company is this? And then what company is this? This is the annual income statements of these 2 companies. The top one, this is SoFi. Looks pretty damn good to me. Top and bottom line consistently growing over time. Really, really impressive stuff, guys. 27.82% year over year in revenue. Expenses only up 11%. Let's compare that. You know what I mean? Revenue over the last year, great. But that benefited hugely from this crypto run-up. If you take a look at this business, I'll take this over this any day of the week. When the market hit the shitter in 2021, look what happened to this business model. Robinhood is going to live and die with boom and bust cycles. When it's great, it's going to be tear the roof off this joint. But when it's bad, it's going to be awful. And it took years to recover. And crypto kind of bailed them out. Kind of bailed out a bad business model, in my opinion, guys. All this increase over the last year is crypto related. That's it, straight up. So when crypto starts to decelerate, I'm expecting this business model with SoFi to continue to flourish because they have all different kinds of income streams throughout this platform. Members, banking, credit card, invest, loans. I'm really happy with where SoFi is, and whether or not these analysts see it or not, I'm not too concerned about that, right? Devin is a good analyst, one of the better analysts on Wall Street, 7 out of almost 98 over 9,800 analysts. The dude's got a good track record, but mine's better. Straight up. Straight up. And, he's pretty conservative with the types of stocks he covers. Schwab, Goldman Sachs, SoFi, Coinbase, Robinhood markets. 25% upside is crazy to me. At $125 per share, you're looking at like an 80 PE. And a price to sales at what's it at now? Price to sales is 27. You're talking 34, 35 price to sales. It's not that kind of company, man. It's just not, in my opinion. That are my thoughts. Let me know your thoughts between Robinhood and SoFi in the comments down below. I'd love to hear your guys' thoughts. And let's take a look, man. All these analysts, these price targets are 21, 11, 16, 13, 21, 18, 13. The majority of them have been exceptionally wrong about SoFi. It's been a great run-up. Sorry about the stalling in the background. They're putting up an apartment building right next to me, guys. But all of them see considerable downside on the stock, ranging from, a little less than 1% to 47%, right? A lot of, Tip Ranks AI and TD Cohen had the $21 price target. Everyone else's is considerably lower. They reiterated their price targets for SoFi. 3 sells, 4 holds. These analysts don't see a lot of upside with SoFi. And in the short term, I agree that SoFi has run up a lot. But so has Hood, considerably in my opinion, right? So be careful buying at these levels. Let the dust settle for earnings. Keep what you got. Hold through earnings and on any dips. If it gets in that $14, $15, $16 range, I will be a buyer of SoFi stock. I own around 6,000 shares of SoFi, guys. Don't forget to like and subscribe. Peace.